Warren Buffett is considered to be one of the greatest investors of all time. He has consistently outperformed the stock market over the course of his career, achieving an incredible compound annual growth rate (CAGR) of 20.3. This has made Buffett's investment strategy a topic of much interest for investors around the world. In this video, we will examine Buffett's investment strategy and the specific stocks that he likes. We will explore the history and performance of those stocks, identify the key factors that led to their selection, and evaluate their future potential. Moreover, we will compare Buffett's investment philosophy with that of other successful investors, and draw insights that readers can apply to their own investment strategies. Buffett's investment philosophy can be summarized in two primary principles: value investing, and margin of safety. Value investing. Buffett's approach to value investing is based on the idea that the intrinsic value of a company can be estimated by analyzing its financial statements, industry and market trends, and management quality. In simpler terms, this means finding companies that are undervalued relative to their true worth. Buffett uses a number of financial metrics to identify potential investment opportunities. These metrics include the price-to-earnings (PE) ratio, price-to-book (PB) ratio, and free cash flow. He focuses on companies that have strong fundamentals, low debt loads, and a history of consistent earnings. Margin of safety. Buffett also places a significant emphasis on investing with a margin of safety. This means purchasing assets at a price significantly lower than their estimated intrinsic value. This approach helps to protect against downside risk in case of unexpected events. Buffett's investment philosophy is grounded in patience and long-term thinking. He looks for companies with a sustainable competitive advantage and a strong moat that can defend against competitors. He is also known for holding onto his investments for long periods, even if the stock price fluctuates in the short term. Buffett's favorite stocks. 1. Berkshire Hathaway Incorporated (BRK). A Berkshire Hathaway is a conglomerate holding company that owns a diverse range of businesses, including insurance, railroads, energy utilities, and retail. Berkshire Hathaway is Warren Buffett's primary investment vehicle. Buffett has a long-standing history with Berkshire Hathaway. In 1962, he began buying shares in the company and eventually took over as its chairman and CEO. Under Buffett's guidance, Berkshire Hathaway has become one of the largest and most valuable companies in the world, with a current market capitalization of around $630 billion. The performance of Berkshire Hathaway has been exceptional, with an annualized gain of 20.3% from 1965 to 2020. While the stock has underperformed the S&P 500 in recent years, it has consistently outperformed over the long term. One of the key factors that led Buffett to invest in Berkshire Hathaway was its focus on a conservative, long-term approach to investing. Buffett has always been attracted to companies with a strong moat and a history of consistent earnings. Moreover, Berkshire Hathaway has also been known to acquire other companies that fit these criteria, such as Geico and Dairy Queen. Despite its impressive track record, the future potential of Berkshire Hathaway is somewhat uncertain. The company has a significant exposure to the insurance industry, which is currently facing challenges related to the COVID-19 pandemic. Additionally, Buffett's age 90 years old has also raised questions about the future leadership of the company. 2. Apple Incorporated (AAPL). Apple is one of the world's largest and most successful technology companies, known for its popular line of iPhones, iPads, and Mac computers. Buffett has been a fan of Apple for many years, and Berkshire Hathaway currently holds around $108 billion worth of Apple stock. Apple has been one of the best performing stocks of the past decade, with an annualized gain of 32.4% from 2010 to 2020. The company's strong earnings growth and dominance in the smartphone market have been major drivers of its success. Buffett's investment in Apple can be attributed to a number of factors. Firstly, he recognizes how important the company's ecosystem of hardware, software, and services is to its customers. This makes it difficult for competitors to replicate, creating a strong moat. Secondly, Apple has a significant amount of cash on its balance sheet, which gives the company the flexibility to invest in new products and services. This, combined with a strong management team and a history of consistent earnings growth, makes Apple an attractive investment opportunity. However, there are concerns about Apple's future growth potential. The smartphone market is becoming increasingly saturated, and it may be difficult for Apple to maintain its dominant position in the long run. Additionally, the COVID-19 pandemic has disrupted supply chains and impacted consumer demand, which could have a negative impact on the company's earnings. 3. The Coca-Cola Company. Coca-Cola is the world's largest beverage company, known for its iconic soft drink brand. Buffett has been a long-time investor in Coca-Cola, and Berkshire Hathaway currently holds around $21 billion worth of Coca-Cola shares. Coca-Cola's performance has been solid over the years, with an annualized gain of 11.0% from 1988 to 2020. The company's dominance in the soft drink market, strong brand recognition, and global reach have been major drivers of its success. Buffett's investment in Coca-Cola is based on his belief in the power of recognizable brands and the importance of a strong moat. Coca-Cola has a global reach, with products sold in over 200 countries. Additionally, the company has diversified its product portfolio in recent years, expanding into non-alcoholic beverages and snacks. However, Coca-Cola faces some challenges in the current market environment. Health concerns related to sugar intake have led to declining sales of sugary drinks. Additionally, the COVID-19 pandemic has negatively impacted demand for soft drinks, as many people are staying home and avoiding large gatherings. Conclusion: Warren Buffett is widely regarded as one of the greatest investors of all time. His investment philosophy of value investing and margin of safety has been the cornerstone of his success. Buffett's favorite stocks include Berkshire Hathaway, Apple, and Coca-Cola, all of which have strong fundamentals, a history of consistent earnings, and a strong moat. While these stocks have performed exceptionally well in the past, their future potential is uncertain. Investors should carefully consider the risks and opportunities of each company before making a decision to invest. Overall, the lessons from Warren Buffett's investment philosophy can be applied to any investor's approach. By being patient, investing with a margin of safety, and focusing on companies with strong fundamentals and a sustainable competitive advantage, investors can increase their chances of success in the stock market.